In this episode, we speak with Mike McGinn, partner and co-head of growth at Sixth Street. He is based in New York and focuses on private investments in growth-oriented companies. Sixth Street Growth provides growth equity and bespoke capital solutions to mid- and late-stage technology companies. It is the dedicated growth investing platform of Sixth Street, a leading global investment firm with over $130 billion in assets under management and committed capital. Through its growth strategy, Sixth Street has invested over $13 billion in more than 90 companies. Prior to Sixth Street, Mike was a managing director in AmSSG at Goldman Sachs. Previously, he was co-head of PCI, AmSSG's growth capital business, and worked in AmSSG's multi-strategy investing group and specialty lending group. Earlier in his career, Mike worked in the Global Investment Research Division at Goldman Sachs. Sixth Street Growth was recognized as a top growth equity firm of 2025 by GrowthCap. I'm your host, RJ Lumba. We hope you enjoyed the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Mike, thanks so much for taking the time to chat with us today. It's a pleasure to be with you.
RJ, thanks so much for having me. It's a pleasure to be here. I'm super appreciative.
So this is, I believe, the first time we've had Sixth Street on, and would love to cover various aspects to the firm. To start off, for the benefit of our audience, if we could give like the broad overview of the firm, and then we'll go into what you lead, which is the growth area.
Sure, happy to do so. So Sixth Street is a diversified global investment firm. We manage over $130 billion of investor capital across a number of different strategies. I'd say the through line and connective tissue across all those strategies is we're fundamental long-term investors, whether we're invested in software companies like our growth franchise, energy companies, consumer companies, healthcare, or a number of other verticals.
One thing in particular I caught on a clip of your founder or co-founder is that there's a difference between private equity and private capital in the way that if you think about investment horizons, whether private equity is typically 5 to 7 year hold, private capital could have more flexibility. How do you look at your ability to stick with companies in the growth area?
Yeah, for sure. So RJ, I've had the opportunity to co-lead the growth business here at Sixth Street since we founded it back in 2018. And it's been a continuation of a 20-year career investing in software technology. I have the fortune of dating that lineage back to working with a number of the founding partners here at Sixth Street back in our Goldman days in the early 2000s. And across those 20 years, there's been a number of partnerships that we forged with companies and CEOs that have lasted many, many years, 5+ years. So you're right that we do have the flexibility. And I think it's one of the hallmarks across the firm is flexible capital and a number of bespoke different solutions. But quite often, we've got long-term funds across all of our strategies. And quite often these partnerships are, many years, 3, 4, 5+ years.
Mm-hmm. We talked to a lot of growth equity firms and private equity firms on this podcast. And we're always trying to highlight for the CEOs what's different about a particular firm over another. Frequently there is an element of value creation that you impart. There's an element of knowing a sector really well. Maybe if you could describe to us as if you were talking to a founder where maybe 5 or 6 different firms are all vying for their attention. How do you differentiate Sixth Street Growth?
Yeah, it's a great question, RJ. It's an incredibly competitive landscape. And I think our differentiation sits with a few things. Number one, I do think we've got some flexible capital solutions to invest across, a number of different kind of bespoke structures. A great amount of what we do is in kind of traditional convertible preferred growth equity type instruments, but we also have the flexibility to do things that look quite different. If I think back to the Airbnb investment that we made back in COVID, which, has gotten a lot of attention over the years. And one aspect of that story that I don't think has been told is that when we were talking to them in April of 2020, we had actually given them 2 proposals. And the reason we gave them two proposals is we wanted to maximize the probability that we could partner with them, because even in the depths of COVID, one of the best business models and footprints, that we had ever seen, a generational leadership and founder team, that was leading that business. And so we gave them two proposals. One was kind of the traditional convertible proposal. And the second was a less dilutive proposal that worked for our risk return, kind of requirements, but gave the company a less dilutive solution. And so the only reason that investment ended up being, kind of structured that way is that's what the founders and the board ended up choosing. It was less dilutive. When you fast forward through the IPO, which we bought shares in, that structure ended up saving, the shareholders, a few $1 billion of dilution relative to what the probably market proposal was.
So that's a good example of kind of a situation that you were very bullish on. You very much wanted to get in and partner with a company. What other areas, I guess, today are you most interested in?
Yeah. So look, today we think it's an incredibly attractive opportunity set. We haven't mentioned AI yet, but let's get to it.
Mm-hmm.
We're believers that AI is going to grow software TAMs, not kill software, as some folks may believe. And I think when you take a step back and look at the opportunity set, you have software trading at kind of decade plus lows if you look to the public markets. Yet the financial profile of many of these companies remains quite strong in terms of still growth rates, retention rates, profitability rates, a lot of clean balance sheets out there. And we think that many software companies are going to be able to inflect growth by leveraging AI to solve more problems for customers. And so as we sift through that, we look at it and say, if we can identify the right companies, the right leaders and management teams, there's this opportunity to take advantage of, again, decade plus multiples with really strong financial profiles. And I think this option to reinflect growth, depending upon, harnessing AI, we think that's a pretty uniquely attractive investment cohort to be playing offense into.
And when you kind of take a look at, I guess, the landscape of private software companies out there, presumably you could dissect this and say that there's a whole segment that we probably wouldn't touch because it's like, these aren't the kinds of companies that are truly embedded into their clients' processes. And then there's a whole other set where they're a source of record. There's a lot of contextual knowledge that they have about the sectors they operate in. How would you kind of lay out the opportunity set of those you really want to focus on? Is it hundreds of companies, thousands of companies?
Let me take one step back. Our growth team is organized around industry. So you mentioned earlier what's differentiating. To your point, I think we also look at industries where, hopefully we've got differentiated knowledge given folks are spending all their time there. So that's application software, infrastructure software, fintech, healthcare, IT. Within those, we've got criteria as to where we want to lean in and invest and where, we might be a little more hesitant given, whether it's AI or other things in the macro. And it's a little different across each of those. But generally, I'd say our starting point is we're looking for the durable compounders. So high gross retention rates with the ability to grow at multiples of GDP over long periods of time. That gross retention rate, is one we're pressure testing, more than ever, given this evolving operating landscape with AI. But we think ultimately, if companies are solving customer problems and are deeply embedded, have earned the trust of their customers, are selling into the enterprise where governance, security, compliance really matter, they've got a scaled group of customers, which we think provides an opportunity set to sell more and new AI-driven products into. We think that that's a pretty attractive setup for, a new investment.
Mm-hmm. We touched earlier on, or I mentioned value creation, but maybe if we could spend a little bit more time there, how do you help your portcos?
Yeah, for sure. So we have a value creation team, which we branded More Than Capital. And, it's a great team of both full-time folks and then, a network of advisors that we have. And we're there to support the management team. They're ultimately the ones that are on the front line. They're the ones creating value day in and day out across the business. And what we're trying to do is provide a perspective based upon the 20 years of experience that many of us have had investing across software, drawing in some of the perspective that we've got from other parts of our firm, given it's a diversified investment business, and then pulling on the specific expertise that our go-to-market, that our CFO functional leader has, and again, being there to support and offer some guidance and perspective to our portfolio companies. I would say we're not the type of investor that, comes in with a playbook and says, we're going to do A, B, and C. We're there to, support the management team, more fully. A couple of examples that come to mind. We invested in a business that was founded by two folks, co-founders. One of the founders made the decision that he wanted to step back from the business, focus on some other things in his life. And that left, the other founder there to run the business. What we did is we're partnering that founder with a CEO in our network who's got 20 years of experience and can be there as a resource for that founder to help him navigate the situation, which he's likely only ever going to navigate one time. But the CEO that we're pairing him with, our perspective, like we've seen this a number of times. So we're trying to harness that experience we've seen across our portfolio companies to try and support him, through this really like vital opportunity for the business. We're not telling him what to do. We're trying to provide a resource to help him make the most of the opportunity.
Mm-hmm. Would like to understand a little bit more about the deployment cadence that you have with your pocket of capital. Roughly how many companies are you looking to support each year or make new investments on?
Yeah, for sure. So like from an investment pacing perspective, we're typically forging 5 to 10 new partnerships a year. That could span from a majority growth buyout or growth control type investment all the way through something that looks a little bit different. But in general, about 5 to 10 investments per year.
Mm-hmm. Primarily US and Europe or globally?
US and Europe. We have folks on the ground here in the US. We've got a team that we're adding to over in Europe based in London who's leading growth investing for us across that continent. They work closely with other members of the Sixth Street team that have been on the ground in London for a while. So it is a global investment footprint.
Switching gears, we always like to learn a little bit more about the investor as an individual. Can you tell us where did you grow up and how did you get your start in finance and investing?
Yeah, sure. So I grew up in South Jersey, suburb of Philadelphia. Did not grow up in this world. Blessed to have two great parents, but neither of them was in finance. So I found my way to finance leading into college. And then I'd say the big hook for me was my senior year at Notre Dame, where I went to school. There was an applied investment class there. And I was fortunate enough to be admitted into that class. We invested like actual endowment dollars. We picked 2 stocks over the course of a semester. But what was really valuable to me in that class was we actually went to visit managers. And Notre Dame had the good fortune, given the leadership of the endowment, to be in some of the best managers in the world. And as a college senior, to be able to go face to face and hear from those investors across large cap equity, across a hedge fund, across private equity, it was a level of exposure that was just so unique and transformative for me that it set the hook in pretty deep from that point on, and ultimately found my way to Goldman, where I had the fortune of meeting a bunch of the founding partners, now at Sixth Street. That dates back to the early 2000s. It was an on-balance sheet investing group that we had a flexibility to invest across the capital structure. We invested just the firm's capital. And it was an amazingly formative experience to really dig deep into businesses, be, kind of appropriately challenged from investment committee with great questions. But it was really rooted in how does the business work? What are the unit economics of the business? Explain, return on invested capital. And it was an incredible foundation for a career as a fundamental investor.
We've spoken a bit about like the tactical, but I'd like to move up into kind of meta level, meaning what qualities do you think make for a solid career in growth investing and being able to work with companies over time and develop a very strong reputation?
Great question. So, and this goes to like what we look for, I think, in folks when they join the team. I think the number one thing, other folks have talked about this, is just deep intellectual curiosity. How does the business work? I just talked a little bit about it from the Goldman days, but how does the business work? How does it make money? What are the competitive threats? Just a true desire to understand how the business works, thrives, and can generate value over long periods of time. I think with that, in the private markets, that interest and curiosity has to be sincere, because we ultimately are chosen as a partner by the decision maker at the company, whether that's a founder, a CEO, a board, co-investors, whatever it may be. we have to present competitive terms, but ultimately we have to get chosen. So I think that the EQ side of this business is important as well, because ultimately we're going to be there, as a partner to the leadership team. And quite often, hopefully it's all up and to the right and things are great. Inevitably, there's always some conversations along the way or debates along the way that you need to approach, with humility and kind of discretion with the leaders of the business to get to the right answer for the business as a whole. So I think if you marry intellectual curiosity, some drive, grit, humility, and then some good EQ, if we can find those folks out there, we want to get them into Sixth Street.
When I prepare for these interviews, I do my background research. It's kind of like a refresh. And I notice there's a different feel and vibe to the firm, at least from what I can gather online and what I know about the firm. But do you find that to be the case internally as well? It's just like a different feel. And I don't know if it's like carryover from your group at Goldman or, maybe it's just the way your founders decided to intentionally set up the culture. But maybe if you could just speak a little bit to the vibe and culture of Sixth Street.
Yeah, I think the culture is unique. And I do think that it starts there. And candidly, it starts with leadership and the founders of the firm who were incredibly deliberate about the culture and setting that culture and the values. And that's rooted in collaborative debate. It's rooted in sharing information, no silos, as is often talked about. You always try and learn from past experiences and try and get better. And I think one of the things that we learned in the early days, when information gets trapped, by the way, I think the same is true with the portfolio company. Like when information gets trapped, there's just greater risk of, getting off course. Right. And so deeply rooted in the culture here at Sixth Street is, sharing of ideas and sharing of information and not siloing informations or opportunities. Teamwork and collaboration. We talk often about cross-platform collaboration. When we did Airbnb, that was our growth business working with a consumer team. We're looking at a sports tech investment right now. We'll look at that with our sports and media team. If we look at something in software selling into the energy end market, you can bet we're going to get our friends in Houston on the phone to discuss, so we don't have to relearn, an energy industry when they've been doing it for 20 years. So I do think it's a unique culture, but I'm also, admittedly somewhat biased probably.
Okay, we're entering the tail end of the conversation. I have two final questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, look, there's a number of people here, Al and Josh, Bo, Julian, folks I've been incredibly fortunate to have worked with, but I'd go back to my parents on that one.
Excellent. Okay, last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yeah, so I'll take you on other endeavor, which is, we're blessed to have 4 kids, probably the other side of the last question. We're blessed to have 4 kids, ranging in age from elementary school into high school. And the highlight of a privileged week is, getting to see them, compete, perform. When you see them have interest in something and care about it, and then see them push themselves, that is great. And it often results in us playing Uber driver for most of the weekend to shoot around. But that is an endeavor or a cause and mission that I take really seriously.
What sports are they competing in?
There we got basketball year round. So that's a big one. We live north of the city where lacrosse is a bit of a religion. So we've got one who's making some inroads there. Our daughter plays a lot of volleyball, which is great. So it keeps us busy, which is wonderfully fun.
Mike, I want to thank you again for taking the time. It's been a great conversation.
RJ, thanks so much.